Let's talk about SEC's strategy and the Capital Market Master Plan. The Master Plan has four main pillars. One is creating diversity of investment products and enhancing liquidity in securities markets. So we've gone through a few areas, but we are still working on some. Private equity is one area that we've looked at diversity. The pillar number 2 is to increase the investor base. That we aim to do through investor education, capacity building, and engagement with the public, like this platform. The third pillar is to strengthen infrastructure and improve market services. I'll talk about digitization at the Commission. I'll also talk later on about the regulatory activities we've undertaken. And the fourth pillar is improving regulation, enforcement, and market confidence. So we talk about the financial sector cleanup that we've done. We've talked about enhancing the regulatory environment and even the resources of the regulator. Because again, we need to have the people to implement the mandate that is assigned to us. As a regulator, we've also broken down from the master plan 3 main strategic priorities. The first is education. So educating the public, educating market operators, and then educating our own employees on some of these initiatives. And then the second is enforcement. If you have rules and you don't enforce it, it can lead to a lack of confidence in the market. And so some of the actions we've taken recently are to show that as a regulator, we will enforce the laws. We will work with other law enforcement agencies to drive through some of the requirements that are embedded in the law and in our guidelines. Then the third pillar is market development. So we have a mandate to support the growth and development of the market. If there are not investable products, if people don't understand how private equity works, how treasury bills work, then we have a challenge. So we are working to develop the market, and you'll see some of that coming out in the products that we also introduce over time. The master plan and the capital markets don't sit on an island. We are tied to the real economy. And so we've mapped the master plan to the various national priorities, which we try to say transcends the political cycle. So for instance, as a country, some of the priorities we have are to increase manufacturing and the agricultural value chain. So we ask ourselves, how do people invest in agriculture? Are there financial instruments through which they can access agriculture short of going to start their own farm? So the GCX is one area we are looking at. We're also looking at the agricultural value chain and how we get players in that sector to come and list on the GACs so that fund managers can find investable agricultural assets to place their monies in. We've talked about one district, one factory. So manufacturing, how are these factories raising capital? Are they relying on debt only? Are they raising equity? Can they get convertible bonds? And who are the investors who will support these things? This will help to create diversity of investment products, which will support the industry. We also have a priority of strengthening institutions and the rule of law. As a country, we have a very stable democracy. Our elections are a bit chaotic, but at the end of the day, for the past, since 1992 or so, we've had stable transitions of power. And so how do we use this to drive our financial sector? And part of it really is achieving gender balance and education. And as a regulator, we find our role in strengthening the rule of law as critical. Another national priority is really technology adoption to enhance business efficiency. And so we've also taken the forefront. Ghana was one of the first markets in the world, actually, to digitize trading. So if you think of our stock market, while people-based activity is a bit reduced, last year we actually had the highest trading volumes on record. In the midst of COVID, trading volumes exceeded by far what has been seen on our markets. In excess of 100 billion cedis of trades were done on the stock exchange last year. And then the last point is enhancing public service delivery. If our private sector is to grow, if our market operators are to derive the benefits they expect from being regulated, then the regulator himself has to have a very professional attitude towards addressing issues, towards delivery of service. And that's an area we also focused on the quality of service that we provide.